Welcome back everybody into another daily recap. Today is Friday and it's the 5th of August and is the NFP day. It's very early. We are still doing New York session, but for me the day is over, so I will just do the recap. So as you can see here, this is the pre-New York, even 1 hour before New York, analysis of the price action, trying to identify relevant PSAs for demand, supply. As you can see, this is very early, so it's not really relevant up to the New York Open. But as you can see, I already had these demand charted up, not the strongest, but if I see a double bottom that can be a buy, as you can see, 40 pips, demand to supply. Of course, we're still in pre-New York, so that for me is a no trade zone. I will only trade after NFP, especially because NFP can be what's the word, volatile, that it can give any sort of price action whipsaw, and I don't want to be caught in some sketchy price action. But this is the first backtesting, and of course this is the after New York Open, but this is not a live trade. Our understanding was to backtest this price action and this candle setup, going and grabbing liquidity at the supply area and closing bearish. I mean, price is not in a strong trend, so of course it's not a trade zone. But as you can see, we are approaching NFP and we are respecting the supply. As you can also see here, this exact trade would be quite sketchy because it would go like 12 pips in drawdown, maybe in profit. But what is really important to see is that at 2:30 we have NFP. NFP comes out much higher than expected. As you can see, more than double. Even the prior was revised on the upside, so it was a very good NFP, very good for the US dollar. So that's why at 2:30 you see the price drop. So of course, in theory, this trade would have been with like 15-20 pips of profit of stop loss, would have gone more than 200 pips, because this single 1 minute candle, very weird. I mean, it's 100 pips. It's very weird that it didn't even make a single top wick. I was hoping for some supply retesting, but it just went straight down. So what happens was that, okay, let's see what is happening. We can either have some entry for buys or for sells. So what we saw was that at this previous demand area that was already charted up, I took my first buy when this candle slowed down a lot, and this bullish was going quite nicely. I think my entry was later than that. As you can see, it was in the middle of the range, but I took my 15 pips partials and the rest went at break even. Again, I took another buy because of course I knew that fundamentally the bias was bearish. So in insight, I should have just taken, for example, a sell at the retest, or the sell here that we're going to see afterwards. This sell with like 20 pips. As you can see, it's very nice. 25 pips probably would have been stopped out at break even, and then even that. But when I saw a double bottom over there, I mean, I didn't take this sell because I don't really like taking sells at a strong demand area. Yes, the price can still go down, but we don't know when. We don't know if price is going to retrace a little bit and then continuation down. So what happened was that I took this trade, but the only thing is that it went 10 pips in profit. So it put my stop loss at break even, and afterwards it just went it took me out at break even. So it's a no loss, no win, because I took 0.02 at break even. This one should have been a sell entry, but as you can see, we are in the middle of the range, so I'm waiting to take a much more clear entry. And as you can see, price, I see that is very strong bearish, is really targeting and going against this support. And I imagine that when price will actually break below, it will end up going down with the momentum. What happened was that I entered with a live candle, this one, and when the price was retracing bullish, I took 50% off. And I really don't like what I did, but it is what it is. And again, when this candle, I can show you, I think, a much more clear image here. So exactly, I took 50% off, but when it closed bearish, and I saw this candle closed bearish. This candle retested the highs and then was flipping bearish. I did my second entry and then I took 50%, 15 pips. I took 0.1 of this first position and 0.01 of the second one. Then it went at break even. As you can see, it went at break even, took me out, and then continuation down. So actually quite unlucky that it took me out at break even with the partials. Otherwise it would have gone to 80 pips with the runner. And that would be a nice idea. But anyway, I didn't take any further trade because of, I don't know, I don't want to be caught in something at a Friday after the NFP. I mean, quite unlucky, yes, for being taken out here. This was nice. Anyway, I should have sticked to one bias of sells. Even looking at the number of green candles compared to the red ones, I should have just taken looking for pullback sell, but we are at a demand, and I only took sells then when the demand was broken, because otherwise, if I take a sell over here and then the price bounce, I would be, okay, but why did I sell in the middle of the range of a demand area? So it's not bad. I'm not in any sort of form upset about it. And we're going to see also why. Because afterwards, I was looking at the price, I saw this candle, but I mean, if the retest, if this price action would have been here, I would have taken the sell because it's a pullback at demand turn supply. But what happens is that this pullback, it was coming short, was respecting, yes, it was respecting these previous lows, these previous candle lows. So failing to break this first candle, and these two candles are failing to break above. So could have been a nice idea, but it's fine. This is the new 10 a.m. the new 4-hour candle, and as you can see, it makes a top wick and then goes nice 30 pips. What happens is that now, of course, price can't just go bearish forever. So we see that the price is clearly slowing down. All these lower wicks, these candles, and now price is showing you up until now, up until here, the price can still show you some sell potential. But if you were by looking at the live candles, you saw that the bearish pressure was not there, because if there was bearish pressure, you would have seen much bigger candles, especially during high volume time. What you see is that instead price makes a new higher low, and this is, you can find it on Instagram on the video that I saw this candle right after this open, because now this is a new higher low after the last lower low. We are going into a bullish bias, and if you don't want to enter there, you have another engulfing candle, which is this one, after the price retested the previous highs, so showing you a clear change in market structure with the break. Let me do it like this. So if you have bearish, then you have some sort of price action, then the candle breaks up, makes a new high, and then retests these previous lows and engulfs. That's a very good opportunity for entering buys. I repeat myself, I was not looking for buys, but I was looking for trades, sorry, but I'm going to show you. As you can see here, 30 pips, and again, immediately saw this engulfing bullish candle, moving on the upside. But again, you have to look on the left hand side and you have to remember what is the main bias. So this is all pre-New York Stock Exchange. This is 7 minutes till this is New York Stock Exchange open. This the pre-New York Stock Exchange open pullback, and this is the actual open. This open is making the top wick of the candle potentially, but it can give you can expect some sort of reaction over there. And that's why I was looking for this range for possible buys. If I was in this buy, I would look for this range to fill, but I was looking for a sell at this area. So as you can see, 26 pips, candle close, candle is opening bearish. I think, look at the time, this is good, possible for continuation sells, and as you can see, 30 pips on the downside, and after that, of course, I didn't watch the chart, I was just looking at the chart, but as you can see, price went back at this area and failed to break. It made a double bottom. So if we are in our change of market structure, so we are bearish, then we create another block that is like this. Price breaks, retests, makes a new high, but there's a price action here, so it makes a new high. At the supply, it goes. What is it? For price to continue bearish, you will need to see a clean break on the downside. And let me put it like this. But what happened is that you see price bouncing and making a double bottom at this level. And then what you see is continuation bullish. So this is green. So this is a confirmation of the price continuing bullish. And look at this candle setup, which is absolutely nice. I show you that the liquidity is grabbed, closes bullish but close to the support. So you have a very high risk to reward entry, and you have 80 pips on the upside with the 10 a.m. candle opening. As you can see, this is when you can enter. If you are still in a bullish bias, you enter exactly at this support because you don't expect price to continue bullish, but you know that if the support is respected, you would have a very nice. This is a 20. This is a 4-to-1 risk to reward. 4-to-1. So you don't, even if the price closes and takes you out for once, you I don't know, you have to just win, I don't know, maybe 20% of the time or 25% of the time to just be profitable, and that's it. So this is very interesting and it's very nice. That's what gives you the confidence to enter enter buys exactly here without being afraid of price continuing down. Yes, price can continue down. It can absolutely. It's in his right to do so. But I know that on the long term, this price, I know that if it goes bullish, I will take 4 times the amount that I lose every time that I'm wrong. So that's absolutely good. And guys, this is it for today. Very short stream video. I see you guys tomorrow. No, Monday.